Hey everyone, Double P here and welcome. So, on this coaching call, what I'm going to be doing is going over a couple of questions I got. One of them had to do with Apple because we've been trading Apple this week, and as you see the date, it's October 1st, 2022. So, you just see it right up. You'll just see it right up there. See right there, October 1st, 2022. So, it doesn't matter what I think or what I feel about what's going on in the stock market or what's going on with Apple. I let my feelings stay out of this because I learned a long time ago that if you lead with trading with your emotions, you're in for a rude awakening. So, a couple of questions I got is, well, what do you think about Apple? Where do you feel Apple's going? What should I do with Apple? Should I buy it because it's one of the top five mega cap, and it's a good stock, and is there a bottom yet? What should we do? So let me put it to you this way. Um, I'm intraday momentum option scalping. So if you see right here on the right hand side, I'm at a 6 month monthly chart. The monthly trumps the weekly trumps the daily. And when you want to drill down into intraday, you want to drill down, look at the 4 hour, the 2 hour, the hourly chart, the 15-minute chart, 10-minute chart, and take your intraday trades based on 5 minute candles and trade on the 1 or 2 minutes because that's what I do for intraday momentum option scalping. So give me a second here. I'm still getting over Rona. I got that long haul Rona cough and all that kind of stuff, and it's brutal. So, looking at this, so I'm going to go over one of my study sets with you because, first of all, you got to look at the price action with the candles. Sometimes 73% of the time, the candles will be your leading indicator because it's real time. The other, like 33% or more, candles will try to fool you, and they fool a lot of traders, a lot of investors. So you need to back it up by looking at indicators. And yes, I know indicators are lagging. Probably about 97 to 98% of the indicators out there are lagging indicators, which means they're behind the price action and they're behind the real time action, right? You have your momentum indicators, you have your trend indicators, you have your volume indicators, et cetera, et cetera, et cetera. Right? So, but when you combine them all together into a study set and into a suite, you'll have a system. And the system that you have, that's what you should use as a trader, right? And that's exactly what I use as a trader. I've built out a system. You have access to the entire system as I'm ever evolving with it, and this shows me what I really need to do. So let me drop down to the monthly here, but just to go to show you, Apple is coming up on earnings real soon. So you'll see it right here. Their earnings is it is October 27th. So this is going to be a real make or break type of earnings for Apple, because I don't think it's going to matter what they do and how they do it, because the market's kind of already priced it in first and foremost. Second, we're in a crazy bear market, but putting all that aside, let's see what the system says. So as you know, my system is working off of the moving averages, the 20, the 200 on a hull, and you'll see it right here. The 200 is moving up, and the slope, the moving averages, what's the most important thing about the moving averages is the slope. So if you look at the slope here for the 200, it's sharp and it's moving not parabolic like this, but it's a steep slope moving up this way. So what's happening now is you see my 20 is right here, and you see the 20 is sloping down hard. So what happens is you're going to see this kind of a pattern, which is going to intersect roughly around here. So that could be a range to be looking at. Now, that's not set in stone, so what do we need to do? Well, let's come over here. Let's move this down a little bit, and let's go to our trend line. So let me come over here, and let's draw this trend line so that you can see. And I'm going to take the trend line from, actually, let me come back here, and let me go, I'm going to go 9 months just so that we can see it here. 9-month weekly. Let me pop up the 9-month monthly. Let's go to time frame daily. 9 months, 1 day. We're going to add it. Not sure why I didn't have it added before. So 3 months. Give me a quick second. 9 month. Yeah, that's properly positioned. So let's go to 9 month. Oh, that's the daily. Sorry. Let's go to 9 month monthly. I thought I already had this on here. I do not. So let me come over here. Let me go to the month. 9 month monthly. Apply. Hit it. Sorry about that. Give me a quick second here. Let's go in the 9 month monthly. So when we're doing our trend line, let me show you where the trend line is going to start. I can take it from the wick, or I can take it from the body. Let's take it from the body. So that's our trend line. As long as Apple is in this trend line, as you can see right here, and doesn't break outside of this trend line, this is the top of the trend line, this is the bottom of the trend line. So this will be support, that'll be resistance. So as you can see where we are right now, Apple is trending in this line. It broke out here, but it came back in, and it tried to break out again, but it came back in. So as long as it's in this trend line right here, you are good to go to literally take a short position. Now, how do we validate that? Well, we come over here and we look at the price action. So in the last 9 months, we look at support and resistance. So I already have support and resistance up here on the low end, on the top end and on the low end, because this is the volume profile flipped on the side, and this is the point of control, which is deadly accurate. So let me draw out support and resistance. So right here, and right here. So if Apple was to break out of this upper channel and break this resistance right here, that's 164, you can see Apple making a move. Now, the thing that would stop Apple is all this liquidity. This is all overhead supply right here. This is a big field of overhead supply. These are from the suckers and the people that bought up here at the high, and they're looking and they're waiting to get out. They're looking to unload. So right now, Apple is right here, and it closed right here. So you want to be looking at Apple. If it's going to make a move to the upside, Apple's got to break through this lower point of volume profile control. This is the point of control. This is where institutions look at the most liquidity, and this is where the most of the buying should be happening, because that's the point of control. but there's a lot of overhead supply weighing down on the stock. People are trying to get out, right? So we look at that and we say to ourselves, okay, what's the next thing we look at? Well, this is the MACD with prices. This blue line right here, if you see it, the first one, this is the signal line. And this is the lagger line. So what happens is you've seen the cross right here and it's moving down. It's still bullish, but it's moving down into a bearish move. You can see by the histogram right here that the histogram is starting to build momentum. So the MACD with prices is a momentum indicator, and it measures momentum. You can see here the histograms are starting to gain traction right down here to the downside, right? And you see the slope of the MACD starting to push down. So that's bearish. You'll see right here, this is bearish. This is the money flow, intraday momentum index. This is taking the price action and the volatility and the volume on the intraday, and it's showing you right now where it is. It's at 47. So this is the 50 line right here. So let's go over here to 50. So this is breaking under the 50 line. Not hard, but it's enough that now this is going to be going, this is signaling that this is bearish territory as well. And then you have my other indicator, which is the money flow oscillator. Now this measures money flow and velocity and volatility all packed into one. And this has been a full cycle from up here. Now it's coming down here and it's starting to really gain traction. And if it hits the 0 line, this is going to be going through, and that's going to be bearish. So you're looking at the signals and you're seeing a lot of bear. And this is like a Maribozo candle. This is like a Maribozo right here. This candle right here. This is in this position right here. This faked out a lot of people because you've got 3 black crows right here. 1, 2, 3. Then you're looking at this reversal right here, but this is literally a fake reversal. This is just a fake bull run for the month. But then you look at these 2 candles right here. This is an inverted hammer, almost an inverted hammer. And right down here, this is a big candle right here. So it's literally, and this is like an inside candle because it's taking out 1, 2, 3. It took out those 2 candles previously, and it filled in the body of the 3rd candle. So this is a bearish reversal pattern going down to the downside inside of this channel. So what you're going to be seeing is and this is what the indicators and the study set and the price action is telling me. Now, could we reverse? Absolutely, we could reverse, right? But right now, we'd have to go look at the other positions, other equities inside of the market to get a better gauge to see what's going on. So when I come over here on the 1 minute chart now, on the 1 day 1 minute chart, you'll see here that I'm looking at what kind of a position that I want to take on Apple. So because I'm looking at the 9 month, let's drop down to the 6 month. And let's drop down to the daily so you can get a really good look. Let me get rid of the pivot points. I'll clean up the pivot points for you so it makes it a little bit more easier on the eyes. So right now what you're seeing is you're seeing the 200, which is the granddaddy moving average. You're seeing the 20. So look at what's happening here with the 200. The 200 is sloping down. The 20 is sloping down and pushing. It just crossed over the 200 and pushing down. This is the faster of the indicators speeding for intraday, and you see what's happening right down there. On the 6 month 1 day, you see what's happening with the MACD. We are bearish, and there's no crossover here. This is continuing to go on the downside, and you see the histogram is still building momentum. And then you see the other indicators right here, it's telling you the same story. If this was to flatten out and smooth out and shoot back up, that's a bullish signal. But right now, it's still kind of bearish. So that's on the 6 month, 1 day. We can drop down and we go into the 3 month. We can go into the 3 month, 1 day. So you can get an even faster picture of what's happening with Apple as it's coming up into earnings. So you can get a really crystal clear view of what's going on with Apple when it's coming into earnings. And you're looking at the same picture right here, but a little bit more magnified and a little bit more significant for you to see exactly, well, what do I need to do? What's happening, right? So I'm looking at this now for next week, because you can see here it's October the 1st. So I want to see what's happening. What should we be doing for next week? What do I want to be looking for next week? Well, I'm going to tell you exactly what I'm going to be looking for next week. So in this particular pattern right here, let's go over the last hour of the day, and this is going to tell us what our price action is. All right. So we start from 3 o'clock. Where was the high print from the last hour of the day? Right here, right? That was the high print. So what I need to do is I come over here to my price action, because I need to map all this out. So that was the high. Where was the low? Well, right on the low, because this is my daily high low. So right here. And where was the close? So the close was 138.19. So we go 138.19. And I can always adjust it. So let's edit it. So 138.19 for all you precision traders out there. So this is going to be the box coming for Monday. So let me just draw it here for you so that you see it. That's going to be the box. So if Apple come Monday, depending on where it opens, if it opens up inside of this box, then this is a no-go zone, or you could actually do a little bit of a debit spread here or a credit spread. But I tend to not really screw around this area, because this could be chop back and forth, chop city. If Apple opens up above the box, slightly above the box, then I can say to myself, I could probably go long, probably about the first 10 to 15 minutes of the market, get in and get out. If the Apple opens up below the box, then I know I'm going to be going short, because I'm looking at the volume profile right here, and this is the lower end. This is the discount area right here. There's not much liquidity here, not much volume is here. And you've got all this overhead supply weighing down, pushing down on Apple. So what would I be doing on Monday? Well, I mapped out my box, and come Monday in pre-market, this is what I'll be looking at. So I want to come over here, and I want to see exactly. Let me just move this down here like that. And I've got to open up my time and sales, because I want to see all the conditions and all the trades. So what I can do here is Apple traded literally 1.8 million contracts on Friday. Give me a second. Excuse me. So we see 1 million puts traded, 880,000 contracts traded. Whereas Apple, where's the VWAP? 140, right? So institutions were doing the VWAP spray, because they're getting out, as you can see, with the 4% move, well, the 3% move here, which is at 1.5%. And you see what's going on here. So what do I look at when I'm looking at option analytics? This is exactly what I look at when I look at option analytics, right? I look here at the put call ratio is 1.1 times the daily average of the last 5 days. So people are unloading, and where are they unloading the heaviest? What are they doing to get into position? Well, it's kind of a trade-off there. You know, they're looking at a delta of 21 to 40. So they could be looking at buying puts. They're not selling puts because the market is going down, right? When you're selling puts, you want the market to be going up, right? So this could be a lot of heavy duty put buying, and then we validate that. We validate that by going to the time and sales to see exactly what's going on. And as you see here, a lot of call buying towards the end of the day, but we have our puts here. All right. Somebody bought 11,000 put, and this is the day after earnings. All right, look at that at 3:30. Right, the October 28th, 2022, 140 puts, which is literally in the money. All right, somebody bought an in the money position, right? 11,000 contracts they bought at 678. Let's do a little bit of math on that. 11,465 times 678 times 100. So somebody shelled out over $7 million. They're taking a position, a $7 million position on Apple in the money to dictate that they may be looking at some bad earnings right there, right? So that's a good sign. That's what you want to see. You want to see what the smart money is doing, right? And you see a lot of call action right here. Some people are somebody or some entity is looking at Apple to make a huge rally going into earnings. So which one do you do, right? And to look at this, now that I'm looking at the time right here, this is a spread. So I kind of didn't see that right there. So 9:30, 15, 27, 20. So at 3:27, someone did a spread. Someone did a put spread. So they bought the 140 and they sold the 137. So there's a put spread. So we could go and analyze that, but we don't need to analyze it because we know what they want to do. All right? So that's a pretty big trade. That's a monster trade. All right? So we'll have to double that up, but that's a $14 million trade right there. 5, 6. So let's analyze that. What was that? 560. That's what that cost them times 11,465 times 100. Yep. So roughly around a $13 million trade placed. Spread, put spread. So what does that tell you, right? That's smart money. That's a big order. So let's come over here. Let's go over to, where was that again? It was October 28th, 140. So October 28th, 140. Yeah, so you see it right there. You'll see the action right there, 140, and then you see the 137, 12,000 contracts, 140 right there. I mean, we could analyze this ourselves. So let's go over here to, let's do a buy side here, vertical. And we're gonna do a buy and then a 137. Obviously not doing 1,000 because that's just ridiculous. So it's a 145 debit. This is a $3 spread. So what's the most you should be able to make on a $3 spread is $1.50, and I'm paying $1.45, so that's 5 cents under. That's not too bad. So let's come over here and analyze this trade. And let's go. Let's get rid of that. Let me come back to the trade. Analyze that. Let me get rid of that one. So, this is the trade right here. Let's have a look at it. 140, 137, 28, 145. I capped it off. Let me come over here to price slices. So let's go to 11 rows of 3-step. And let's open up my price slices. So let's look at this trade right here with price slices. So it's a 140, 137. So Apple goes down to 3% at 133. What are we looking at here? That's a 21% gain. So you can see it right here. It's a 21% gain, $30. I mean, that's a spread, right? So obviously we want the market to be going down. I mean, that's not bad. I mean, that's a pretty good position. We're at 138 right now. Yeah, I would do this trade for sure. What's that? 130, 136, 6%. Yeah, I would do that trade. Absolutely, I would do that trade. So let's come back over here. So let me go analyze this a little bit more. It's a $1.45 debit. So that's not bad. That's up 24%, 28%. Yeah, that's 27 days out. I mean, that's not a bad trade for a long-term trade, but we're intraday momentum option scalpers. So let me see what's going on here. So 140, 137, that's $2.60 right now. 395. So let's go back over to October 28th. So 140 is 745 and 137 is 6. So we're paying almost half. This is what this is going to be worth. So the 140 is 745 and the 137 is 610. That's 27 days out. So if you want to find out what an option is worth, we'll come out the 6 days and then you'll see exactly what an option is worth. 140 is worth 395. 137 is worth 260. Would I grab the 137? Yeah, we're at, what are we at now? Apple closed at 138.20. So let's come back over here and look at the chart. Look at the volatility here on the lower end of this band. I'm looking at 137.98. Yep. So 137, 260. Where's the volume on this one? 6,000. I would absolutely do this trade right here. So 137, 130, 136. Let's look at the volume here. Let's look at the volatility. The delta is really high on that. I would absolutely do this trade come Monday. Let me have a look at it here and see what the volatility is. Bullish, bullish. Average true range, 15 cents every 5 minutes. I would absolutely do this trade. Yeah, I'm looking at it right now. And as you see, this is my methodology as I'm working through. And this is the implied, this is the Theo optional price. How high could it get? Yeah, I would absolutely do this trade right here. So this is the probability. Let me draw this over here like that. 321. Yeah, I would absolutely do that trade. All right. So you see the methodology of what I'm going through when it comes to Apple. So what do I think Apple's going to do? I don't know. Right? I'm not Houdini. I don't project. I don't think. I don't feel. I go by off of options analytics. I go off of price action, stock price action. I go after sentiment in the marketplace. I go after where we are right now. You've seen how I did the channel. And I drew everything out. Let me clear this drawing board, this drawing set. And let's go and let's take Fibonacci. Because I got a question about Fibonacci as well, Fibonacci retracement. So let's come over here. We're going to take our Fibonacci from 176.15. All the way down to this low right here. Well, I can probably go down to here. No, I'll go right here. So we see here where Apple is. So one or two things could happen here. Because we're at the lower end of the volume profile and there's not too much liquidity down here. There's not too much order flow or volume, right? This is the discount right here. But there's a lot of momentum, a lot of overhead supply pushing down on this stock right here. I mean, we're at the zero line right here. So one or two things could happen. This could be a bounce play, right? And if it bounces, where's it going to go? Well, it's going to go right here to 143.11 because that's the lower end of the volume profile point of control, right? So that would be the next step up. And what's the next step up from there? Well, 23.6. So what's 23.6? We're looking at 147. If Apple was to fight through all of this order flow, all of this overhead supply, those are the next two levels. And as you can see right here, the 20 is literally almost about to touch that Fibonacci line. Now, is that coincidence? It's not coincidence, it's science, right? And then look at where the 200 is right here. It's sloping, right? Go back and watch the beginning of the video. You'll see exactly what I'm talking about, right? And this is gaining traction. But looking at Fibonacci, right, you can say to yourself, okay, well, you know where your entry and where your exit is. You know what your risk and what your reward is if you map everything out as I'm showing you. Now, I've got different Fibonacci levels on here that I've released in version 3.0. For those of you that have watched it, you'll know exactly what these two levels are right here. So if Apple was to be going down, well, these are my levels right here. So where's my next two levels based on Fibonacci, right? We're at 130. We're at 138.20 right now. 130.06 is the zero line, which is literally almost where it's at. So let me crunch this down here. Me doing a put spread, I'd absolutely look at taking that put spread or doing a straight out put, as you can see it right there. And where are my profit taking levels? 128.54, 114.52. How long will it take to get there? Don't know, right? We know the average, we know by going with the average true range. Let's go over here and let me remove this. Let me remove the money flow and put in the average true range. And because everything else is set on hold, I'll set that on hold to speed everything up. I mean, we look at average true range. We're looking around $5, right? $4. So Apple moves anywhere from $4 to $5. So when we're looking at this, at a 138, and we don't have to split hairs and be very specific. I can say $5.50. You know, I'm looking at a 132. So where does that take us down? 132. I mean, that would be my first point. That would be my first point of exit to take profit. Then I would wait to get to 128.54. Then I would wait, well, that's daily. So we can figure this out, how it can move in a matter of days. And we come over here to figure out in 6 days, Apple is supposed to move plus or minus $6, right? And I just did the math for you. It's 138. So let's do 138.20 minus 677. So we'll go 650. 131, right? In 13 days, $9, right? So where does that put us? 129, 128, right? Literally, right back where Fibonacci is, 128.54, right? So once again, is that a coincidence? No, it's not a coincidence. It's science, right? This is how you map out your volatility. This is how you map out your price action. This is how you map out where the stock should go. These are called gravity points. These are called points of inflection where the stock is supposed to go to, gravitate to, or drop down to, right? Now, is it a precision science? I mean, nothing is 100% set in stone, but you can have a high degree of confidence knowing that when you map it out properly and the way everything is moving and showing you on the screen, that this could be a really good trade. So you can go either way. So you map out the upside and you map out the downside. All right. So I've answered a few questions as far as not what I feel Apple is going to do or what I think Apple is going to do. I map out option analytics. I map out price action. I map out where the trend is and where the momentum is, right? So you just seen all those questions packed in to what's going on with Apple. What am I going to do Monday morning? I'm going to wait for Monday morning to roll around before I take my position. But I'm very confident in what kind of position I could be taking, unless there's some wild, erratic news that comes out from Jerome Powell or the Fed that the market launches into a huge rally. So either way, I'm going to be prepared. So if Apple goes into a huge rally, am I going to be taking that position? Well, let me look at it. 6 days from now, let me see what Apple is going to be doing. I mean, the options already lost 64% of their notional value. So, I mean, if anything, what I think I might do is I think I might let Apple, either one or two things. I could let Apple go for its momentum tear to the upside, and if it hits the high of the day early, like literally within the first 15, 20 minutes, I might turn around and short it, depending on what the rest of the market is doing. Or if it out of the gate and it starts to trend lower, I'm going to be diving in and doing that put spread, or I'll be buying the put outright, right? Depending on what the volatility looks like when the bell opens up. So I have to look at it and say, you know what? So implied volatility, what we're looking at is a 43 vol right here, 44 vol, right? I don't mind buying volatility. Yes, we should be selling volatility, but I don't mind buying volatility. That's a little bit high to be selling volatility, because if it reverses on you, man, and you're selling and you're trying to sell premium, you could be in a little bit of a situation. So I wouldn't mind buying that volatility on the put side. On the sell side, what are we looking at as far as volatility or implied volatility? That's really high up there. That's getting up there. It's getting a little bit crazy. So what I would do is I would look at, I would probably look at doing something way out of the money. What's this vol? 44 here? And 6? 43? 77? Yeah, I might look at, I could sell premium at the 150 strike, but we'll see what happens. I'm probably going to do my put position on Monday. So that's Apple. That's what we've been trading lately. That's why I've been trading Apple lately. I mean, you can see what the market makers say right here. The market makers say it's supposed to move plus or minus $1.64 come Monday. We'll see, right? So for 6 days, we already know, because we've seen the average true range, right? So that's a little bit off. I don't look at this that much anymore because it's kind of off. It's been off for quite a bit, but I mean, it's just a basic gauge for you. So that's Apple in a nutshell for this coaching call. This is what I'm looking at. And what I wanted to also show you is, people are asking me, well, isn't there anything up in the market? Well, yeah, there's lots of stuff that's up in the market. I mean, you want to trade stocks under $10, under $20. There's lots of stuff that's up in the marketplace. I mean, we can come over here to FinViz, and you can see it right here. There's lots of stuff here that's up in the market, right? Finger motion, that's 82%. What's this? Capital markets, salt gain, leisure. I mean, all this is up, right? What's this here? Telecom, that's up. Biotech. I mean, quite a few of these are biotechs, right? So I kind of want to stay away from these lower end type of stocks, but I mean, you feel free to trade them. Like you can definitely if they had options, I definitely trade them. Like this one here, I traded before, but it was more on the long side because they got no options to trade. But I traded this stock before, Avenue Therapeutics, and I did trade it roughly around this time period right here when it had its big huge movement. So yeah, there's definitely some stuff for you to trade. What's this? Finger motion. So usually these stocks like this, they don't have options, and you really want to have options because the bid-ask spread is like absolutely insane. So let's go have a look at this right here with the bid-ask spread, and let's see if this is something that we want to trade here. So what is it? FNG finger motion right here. Yeah, I know it doesn't have any options on it, so let's come over here. 31 million shares of volume, so average 365. So yeah, it had a big momentum move. Let's come over here to the 3-month 1 day. I mean, this is at the top of the range here, right? So what is this? 43 cents, 78 cents. So this is at the top of the range here. I mean, we're at a 96. We're super oversold. This is parabolic on the MAC. This is straight up. This is the indicator. And this is the huge Maribozo to the bullish Maribozo candle. Huge. But look at all this supply right here. Look at all this right here. So, I mean, I'd have to be really careful about trading this kind of. This is a lot of volatility right here. But I mean, totally doable, right? Totally doable. The trade, you'd have to be really nimble to be able to get in and get out. So, I mean, there's lots of stuff that's up in the marketplace. It's just volatile and it's like under $20 and under $10. So you just got to see what your stomach is with this kind of stuff. I mean, this stuff. I mean, I started trading this stuff years ago, and I still trade this stuff sometimes when I see the volatility is right for it, right? I mean, the bid-ask spread is actually not that bad. The bid-ask spread is actually pretty good, right? But we come over here, it didn't really do anything, right? I mean, this stock really didn't do anything. I mean, let's look at it. I mean, it chopped around. Well, actually, it did make some moves. It made some moves. A lot of consolidation there. Consolidation again. So let's look at this one here. So consolidation. Do the rectangle. Why isn't that working? All right, so just got to get my tool working here. Drawings, rectangle. Okay, my tool isn't working, my rectangle tool, so no problem, I'll do it this way. So consolidation right there, breakout. More consolidation. So this would be a real long wait, but this is a good position to get in here. Above the 20, under the 20, didn't really break, broke down here, but the 200 is pushing up here. So that would have been your sweet spot area right there, because that's when it took off. Right on that reversal right here. See that reversal? So let me show you this right here. This right here, this is your breakout right there. Because that's an inverted hammer and that's a reversal. And then you see right here where it just took off and went. So that's where you want to be. So now, like I said, those are the pockets that you want to be trading. There's some big pockets. There's some good stocks to be trading. If you're looking at doing $10, $20 stocks and under, you've seen how I mapped it out. You've seen what you need to look at. You've seen what I'm doing with Apple. So I hope you enjoyed this coaching session, because this is what it's all about, breaking down why we trade what we trade, how we trade what we trade, what we're looking for when we're trading, and then are there opportunities elsewhere in the marketplace to be trading to the upside. There's absolutely opportunity in the marketplace to be trading and doing all that kind of stuff. So hope you enjoyed this coaching call. If you got any more questions, definitely let me know. My name is Double P, over and out. We'll see you in the next trading session. Take care, everybody.